Hi folks, one of your classmates asked for a bit of assistance. This is problem number 18 from the Module 1 homework. Okay, so she asked, this particular one takes a look at a balance sheet. Okay, so let's just go through, there's two parts of the problem. We'll go through both parts and hopefully it'll make some sense to you at the end. Okay, so they give us some information about looking up corporation. And so anyway, they want to open up this new corporation. So they give us these series of activities right here. And they want us to make journal entries for this. Okay. All right. So the journal entries, so like here, received $60,000 in cash from the investors. Okay. So that means their cash is going to increase, right? And then they're going to have stockholders' equity of $60,000. So basically the journal entry would look like this below. Okay, so you see where it says cash, or in this case they put in common stock. All right, so there's 60,000 in cash, and notice how you have to put the A here and then the debit and the credit. Now the next one, it says they borrowed $20,000 in cash. So again, their cash is going to increase, but now they signed a note, so they're going to have a note payable, which is a liability. Liabilities increase on the credit side. Okay, so that journal entry would look like this. Okay, B. So anyway, those are the journal entries. Now we ordered some equipment costing $16,000. So we ordered some equipment, right? So what would that look like? No journal entries required. Why? Because we didn't get anything. All we did was order it. Nothing actually happened yet. Okay. On D, it says we purchased $9,000 in equipment, paying $2,000 in cash, and signing a 6-month note. So what that's going to look like would be like this. Okay. If you take a look, what we're going to do, we're debiting the equipment. We're debiting the equipment because this is increasing, right? We're crediting cash because cash is decreasing. And then notes payable, we're crediting that because the notes payable is increasing. And of course, this has to do with the acronym dead clerk. And you might want to watch, there's some videos there. I say watch before chapter 2 about doing debits and credits. So anyway, those are the journal entries for the items. I think that was all of it. Oh, and it says C, received the equipment, paid for half, put the rest on account. So again, here we got more equipment. Our equipment is increasing. Our cash again is decreasing. And our accounts payable, we're going to pay half of this later, is increasing. Okay? So now the next part of this is they want you to take this information, okay, and put it into a balance sheet. Now the first thing you need to know is, okay, what's on a balance sheet? So if you remember, a balance sheet, here's the accounting equation: assets equal liabilities plus stockholders' equity. Okay. Now, fortunately, all of these items fit into that. So, like, for example, cash, that's an asset. So this is an asset here. These are all assets, right? Equipment, that's an asset as well. Account payable is a liability. Note payable is a liability, short term, and then we got long term. Notice how they separated them. So now the thing is really to get these in the right place. What I would recommend you do, go to the textbook, because when you do this online, it's a little particular. So what you're going to see online looks like this. Okay. So for example, it has all these little drop down things. Now, part of the problem is sometimes to get those little drop down things, they have to be kind of in a specific order. But notice here, so the first thing, what's going to happen, you need, now if you remember, a balance sheet is as of a certain date. So if you go through and you take a look at this on, and I'll show you just a minute on the actual homework thing, it's going to have a drop down right here, and it's going to give you some choices, and it's going to be as of. Okay. Then over here is going to be assets. Okay. And it's going to look something. So when it's all said and done, so you have to use something as like a guide to put these in the right place. That's why if you take a look, and here's the solution right here. So you see, let me move this guy down. So right, so we would be adding this in here, right? And then there's the assets. Now current assets. So you see like these titles. That's why you need to take a look at another item to make sure you get the titles right. Assets, over here is liabilities. Now notice how they have current liabilities here. Then they have total liabilities. So you actually need something. It'll be very difficult without looking at something as a guide to put these exactly in the right place. Okay? To put it exactly in the right place. It would be difficult. Okay? And it says here, so this is requirement 3. There must be another requirement here where they gave you some additional information. But anyway, that's how you do this balance sheet. Now let me go over here. Let me see if I can go, hang on one second here. I'm going to go into, I want to show you this problem, how you'll see it exactly. Okay. Go, connect. Go, connect section. It's coming up, folks, coming up. All right, so all assignments, have you all? Okay, and we're going to go to problem 18. Okay, so preview. Let's go to 18. Okay, so this is the problem. All right, so here this is 17 and 18. So here, this is where, so they're having you doing the same transactions here, as you could see. By the way, these hint buttons right here, if you're having trouble with this, and here's the solution, right? If you're having trouble with this, check out this hint button. This is, I showed this to you on the orientation videos, but they're really helpful. So boom, see, you can click this guy here, and it's going to take you through the process.
We will summarize the financial effects of the transactions of Red Rocks Corporation that occurred in its first month of operations. We will also generalize these transactions, post them to TA.
Oop. Didn't want to do that. Okay, let me go back here. So, hang on. Got to give this thing a minute. And I wanted to go here to the student assignment view. Sorry, I think I confused the heck out of my computer here. Okay, all right, we'll try it again here. Here we go. So anyway, I just want to show it to you. Go to student assignment view. This is what you're going to see, okay? And this is why sometimes you need a guide to take a look at, especially when you're first starting out. Okay, so we're going to go here. We're going to go to number 18. Boom. Okay. So there. So here's that balance sheet. So you see what I'm telling you? This is, so you got these blank spaces. So you're going, wow, what am I going to do with all those spaces? You got to look at something, right? So you go here. Notice what happens. At May 31st for the month ended. A balance sheet is as of a certain date, so it would be this. Then you're going to go here, and let's see what options you get. Assets, current liabilities, or liabilities. Well, the first one is assets, so it goes there. Now the next one, you go here. What assets come first? First, current assets go. So when you click on each one of these, you should get, like here, you should get some options, right? Now, when you take a look at these options, you see where it says accounts payable? That's a liability. Accounts receivable, that's an asset. Accumulated depreciation, accumulated amortization, accumulated depreciation, those are not assets. Advertising expense, not an asset. What we're looking for here is we want cash. Cash always comes first. Click, there you go. And then over here, you put the amount of money in. Okay, so it takes a little bit, and you got to look at something else to do this. Okay, and again, don't forget, see over here where it says hint? Click on that hint button, and it's going to run you through. Here's a video showing you how to do it. Okay, all right, folks, I hope you found that helpful. Be in touch if you need some help. Talk to you soon.